All right, let's get right into it. Have you ever looked at a tiny trading account and just wondered, is it really possible to grow this thing into something massive? Well, we're about to break down a system for doing exactly that, based on a trader who claims to have done it over and over again.
I mean, that is a huge claim, right? It definitely gets your attention. But look, this isn't some story about a lucky trade or following sketchy signals. The person we're drawing from here claims to have a specific, repeatable plan.
So that's the big question, isn't it? Was this just a lucky streak, a total gamble? Or is there an actual blueprint here? A system that anyone, and I mean anyone, with the right discipline can follow?
Okay, let's not waste any time. We're going to unpack the key pillars of this whole strategy. We'll start with how to define your perfect setup, then we'll get into how to risk capital aggressively but smart, and then, maybe most importantly, how to protect yourself from blowing up. After that, we'll talk about securing your profits, and finally, proving that the whole system actually works.
All right, first things first. Before we even talk about risk or profits, you have to know, without a shadow of a doubt, what you're looking for. This is what our source calls your A-plus trading model.
So, what exactly is an A-plus model? You can think of it as your number one, high-conviction, absolute favorite trading setup. It's that one pattern that, when you see it, everything in your brain just screams, yes, this is it. The source even calls it his personal holy grail, and that's the kind of confidence we're talking about.
Okay, so this slide lays out the source's personal A-plus model, and you can see how incredibly specific it is. He's looking at things like daily and weekly demand zones lining up, a clear order block, a fair value gap. Now look, don't get bogged down in the jargon here. The real takeaway isn't these specific technicals. The key is the process. Your own model might be totally different, but it has to be this crystal clear, a simple 4 or 5-step checklist you can write down. If you can't, well then you don't really have an A-plus model yet.
All right, so you've got your A-plus setup staring you in the face. What do? This is where the rules of engagement come in. And just a heads up, this first rule might be the most controversial thing you hear about trading all week.
Yup, 5 to 20%. And no, that is not a typo. The system literally calls for risking between 5 and 20% of your entire account on a single A-plus setup. And I know what you're thinking. That sounds completely insane, right? But hold on, because there's a very specific logic behind this madness.
And this is where it all clicks into place. The whole rationale is laid out here. The argument goes like this. When you're trading for a prop firm, risking 1% of the total account, you're often only allowed a 10% total drawdown. So that 1% risk is effectively 10% of the capital you're actually allowed to lose. See? The principle is identical. You're just applying that same effective risk to your own personal capital.
But of course, you can't just throw that kind of risk around without some serious guardrails. It has to be balanced by super strict rules. You must have a hard stop loss and a take profit target, no exceptions. You don't get greedy and chase huge moves, you take what the market gives you. And, this is critical, you always check for fundamental news releases. If your technical setup is screaming buy, but the fundamentals are screaming sell, the trade is off, period.
Which leads us to what is honestly the most important part of any trading system, and that's defense. Your number one job as a trader isn't making money. It's protecting the capital you have. You protect it first, and then you risk it.
And this is probably the most important rule in the whole system. Think of it as your psychological circuit breaker.
And here it is, the 2-loss rule. It is dead simple, but it is not easy. If you lose 2 trades in a single day, you are done. You stop trading, you shut down the computer, you walk away. No revenge trading, no just one more to make it back. It's over.
And this quote really gets to the heart of why that rule is so non-negotiable. That is your brain tricking you because you are now money hungry on the charts. He just nails the psychology. That little voice in your head telling you to keep going, to win your money back, that's not strategy talking, that's pure emotion. You've become money hungry, and that is exactly when you make your worst, most devastating mistakes. This rule is here to protect you from yourself.
Okay, so let's say you've followed the rules. You've had a few wins, and your account is starting to grow. Now it's time for a really powerful psychological shift, a way to lock in your success and take a ton of pressure off. It's time to start playing with house money. The strategy here is super straightforward. Let's say you start with $500. Once you double it, once that account hits $1,000, you immediately withdraw your original $500. Boom. Now, every single trade you take, every dollar in that account is pure profit. It's house money. The psychological weight just lifts because you know your initial capital is safe and sound, back in your bank account.
In fact, the source we're drawing from suggests an even more aggressive approach. He says to withdraw your initial stake plus 50% of the profits. Why? Because it actually pays you for your hard work and it builds this incredible confidence. It reinforces that core belief. Hey, I did it once. I can absolutely do it again.
So, we've got the A+ model, we have the rules of engagement, and we have the defensive mindset. But there's one piece missing. How do you actually know if your system works? This brings us to the final and maybe most crucial step, validation.
So what's the magic number here? It's 20. But here's the catch. We're not talking about 20 backtests. The source is absolutely adamant about this. You need a sample size of at least 20 live trades to have any real idea if your system has an edge in the real live market.
And this right here is so important. Backtesting is okay, but it's like practicing for a boxing match against a punching bag. Yeah, you'll look great, but the bag doesn't hit back. Live testing, even on a demo account, is the real deal. The market throws new variables at you every single day. That's the only way, the only true test to see if your strategy can actually hold up under real pressure.
So, when you boil it all down, here's the takeaway. The system we've just walked through, it's really just a set of clear rules. It's simple, but that doesn't mean it's easy. Because the real variable, the thing that will ultimately determine your success or failure, it isn't on the chart. It's you. The system is clear. The only question left is your discipline?